ready to supercharge your Bybit trading game and potentially multiply your profits. Today, we're diving deep into the art of pyramiding. First things first, you need a solid, well-researched trading strategy before you even think about pyramiding. Identify a strong uptrend or downtrend that you're confident will continue. This strategy works best in strong trending markets. Next, choose your leverage wisely. While pyramiding can amplify gains, it also magnifies losses. Start with a lower leverage than you normally would, perhaps 3x or 5x, until you get comfortable with the strategy. Now, the core concept: initiate your first trade with a small percentage of your capital, say 5%. As the price moves in your favor, place additional buy orders in an uptrend or sell orders in a downtrend at progressively higher or lower price points. Respectively, reduce the size of each subsequent order. For instance, if your first order was 5%, make the next 3%, then 2%, and so on. Crucially, implement tight stop-loss orders for each new position you add. Move your stop-loss for all previous positions up to just below the entry price of the newest position. This helps lock in profits and protect against sudden reversals. Finally, consider taking partial profits along the way as the price reaches key resistance levels. Close a percentage of each position to secure gains. This reduces your risk and adds capital back to your account. Remember, pyramiding is a powerful tool, but it requires discipline, risk management, and a solid understanding of market dynamics. Good luck, and trade responsibly.